Are we seeing a big downward shift in the Houston, Texas housing market? And what does it mean for you as a home buyer or an investor entering 2025? The data in Houston is starting to get very, very interesting. If we go to Reventure app and type in Houston, you can see we're now seeing big differences in how the housing market is behaving. There's a lot of areas in Houston where prices are dropping and dropping by a lot. Other areas, meanwhile, where prices are going up and going up by a lot. And these differences are being caused by one thing, everyone: inventory. Quite simply, we have seen a massive spike in inventory across many parts of the Houston housing market. The supply is surging. It's surging sometimes to record levels in the last decade. And when you see that supply surge in your neighborhood in Houston, that's a signal of declining prices. I actually want to zoom out for a second and just look at the metro area of Houston. You can see currently there's 27,000 listings across the Houston metro, very big geographic area. And this listings count surged year over year by about 35%. And we're now close to the highest level of inventory in Houston going back to 2017. So this is good news for you as home buyers or investors in Houston. More supply is coming on the market and coming on the market fast. But here's the interesting thing. If we shift back to looking at the zip codes and go to a data point called inventory surplus or deficit, what do you see? Is that inventory is way up in many of these zip codes to the south and to the east and to the north in Houston, but is still down to the west side of Houston. And so the way to interpret this map, if you're a home buyer, is if you see blue, that means inventory deficit on this data point. If we're in an inventory deficit, that means we're still in a tight housing market. Meanwhile, if you see red, especially dark red, that means maybe there's a crash playing out. Maybe the supply has spiked to a level that just we haven't seen in a long time. For instance, if we head up to Spring, Texas, north of the downtown area by about 30 miles, you can see we are now at the highest level of inventory in 77373 that we have seen in a decade. So before the pandemic, there was 190 homes for sale in this zip code. Now there's 320 homes for sale in this zip code. So if you're someone, a buyer, trying to understand this market, search your zip code at www.reventure.app and look at this inventory data. If you see something like this, that's a signal of declines on the way. And the general trend we're seeing in Houston is this, everyone. It's a demographic trend. In the areas that are wealthier and with higher incomes, we're seeing still an inventory shortage. So some of these really desirable suburbs in Houston, particularly in the 5 to 10 mile ring of downtown, they still have a massive inventory shortage, lots of demand, and prices are still going up. These suburbs would include Bellaire, for instance. Still very tight housing market there. However, if you go to an area that's lower income and that's more dominated by real estate investors in terms of ownership, those locations are potentially crashing. I mean, the supply spike we're seeing in those lower income investor dominated zip codes in Houston is wild. And so it's really a bifurcated market where you have to understand the trends. Because if you, as a buyer, investor, or realtor, walk into a deal, walk into trying to do a transaction, not knowing these trends, you can make a big mistake. You can advise your clients poorly. I want to show you guys an example here of what's going on in some of these areas in Houston, how much prices are actually dropping. This is the zip code 77016 that has experienced a big inventory spike. And this is a home from a builder, a 3-bed, 2-bath. It was built in 2023 and it was originally listed for 400 grand in April 2023, a year and a half ago. And they have since cut the price on this new build down to 310. So the builder's cut by $80,000, which is a 21% price reduction. Zillow says the value estimate is down 23% in a year. This house is now selling for $147 a foot. Now, that's a good sign if you're a buyer when you see listings like that. It's telling you the market's declining, prices are getting more affordable. But I actually want to flip it around and help you think about maybe how this seller or builder could have used data to make a better decision. Because if we go to this zip code 77016, you can see it as one of the biggest inventory spikes of any zip code in Houston. And if we go to monthly view, we can see the inventory was even high in 2023. In April 2023, the inventory was well above the long-term norm. It had already exploded. So that was a signal to this builder already a year and a half ago that this was a declining market. And then since then, look at this, the inventory has spiked even more. And so if you looked at this inventory data a year ago, you would have known that this was a declining market and maybe you should have been a bit more aggressive in terms of getting ahead of the market and cutting prices. You can see our Reventure app home price forecast score had this area firmly in a buyer's market by late 2022. So this home price forecast score was seeing what was going to happen in this zip code well before it happened. If you looked at this data as a builder or seller or investor, you would have known what was coming and made a better decision on your listing. And this is the value of looking at data, everyone. If you're a buyer, seller, investor, or realtor, you can have a much more educated determination on where the market is going in the future. And this is not to say that you can 100% predict the future of the market. You can't. However, you can make more informed decisions based on what the current trends are telling you about the future. And so if you're in an area in Houston or Texas in general that has a big inventory surplus, where the inventory surplus is in red and is something like 42%, like in Austin, listings in Austin are 42% above the long-term norms. In Dallas, they're 40% above the long-term norms. In Killeen, they're 70% above the long-term norms. In Fredericksburg, they're 65% above the long-term norms. Actually, in this kind of comparison, you can see Houston still is a slightly more constrained in terms of supply than these other areas in Texas. But the overall point is, you look at this supply data, you then combine it with the home price forecast score, and you can really start understanding the direction of your market and make a more educated decision. And we have some interesting county level dynamics here as well. So I just switched to county view on ReVenture app, and the big counties in the Houston metro are Harris, Montgomery, and Fort Bend. And what you can see on the home price forecast is Fort Bend actually has the highest score of 52 out of 100. So prices in Fort Bend, we're not actually predicting them to go down by that much over the next 6 to 12 months because we still have a positive score. However, in Galveston, Brazoria, Liberty County, San Jacinto, Grimes, Waller, we're predicting bigger price declines, and we might start to see that in Montgomery County soon as well, because the inventory of homes for sale in Montgomery County is now spiked, and we're almost now above pre-pandemic levels. And so make sure to access this data right now. If you're a home buyer or investor in Houston or Texas, go to www.reventure.app, go to the search and search your city or zip code in Houston and start digging into this data on inventory and home values for free. And then go to the popular data where you can access the home price forecast score, overvaluation rate, and cap rate. Especially if you're an investor, you want to look at the cap rate data. You can access all of that data under a premium plan. The cost is $39 a month. If you're going to make that buying decision in the next couple months, sign up for that monthly plan. If you're going to be more of a long-term viewer of the market, researcher of the market, sign up for the annual pass. You can get a 15% discount on that annual pass, knock the price from $39 to $33 a month. This is a great option for those of you who know you're going to be using these tools for a more extended basis and who want to do more extensive research. Sign up for that annual pass right now if you're a buyer or investor in Houston wanting to make a more educated decision.